Okay, I've unpaused it and we are ready to get started. This is Coronavirus Aid, Relief, and Economic Securities Act, also known as the CARES Act. I have with me Jon Karp, who is a CPA with Whitley Penn and who has been my sounding board on some of this, my questions about the CARES Act. And so I invited him to come on and do a presentation that we could actually present live, as well as push out to people later on. That's why we're videoing it and invite people on to ask questions. So with that being said, I'm going to take it away to Jon, and he is going to share with us a PowerPoint that he's done, and I'm going to ask him some questions. And then at the end, if you will all just either raise your hand and I can unmute you and you can ask your question of Jon, and we will get through this, because I know a lot of us, some of us are in the stage where we've already applied, and some of us are in the stage where we're independent contractors or sole proprietors, and we're trying to figure out how it's affecting us and what we can do. So take it away, Jon.
So I think first I will say that, I think if you don't already know someone who has been tested positive for coronavirus or COVID-19, well, you can now say you've heard from someone who has it affected their family. So because if you go back, and I'm really happy about the way that it affected my family, because my daughter got it and she was an early adopter. And when I say that, if you look at what we're seeing today in terms of some hospitals and what the news is reporting, and even what we experienced in the 7 days that she was in the ICU, from the day 1 to day 7, how her medical treatment in the protocols all changed in 7 days. And so my daughter came home from Ireland on May 10th with a school trip, and she and 12 other between students, faculty, and chaperones, 12 out of 29 tested positive. 3 of those 12 that tested positive had some acute symptoms. And so, but to give you an idea of how this really works, she's still not home yet. So she's been out of the ICU and she's been out of the hospital and fever-free and asymptomatic, but as long or as short as 7 days ago was still testing positive. So I understand why there was an ICU director who said to me, everybody's going to get this, because even now, if you go to the CDC website, some of the guidance is if you're fever-free for 72 hours, you're clear to go. So everybody should know that she's on the other side of this. But just so everybody also knows, my daughter is a young woman and healthy, had no comorbidities, and she's 20 and a junior in college. So I think and by definition, I would tell you she was immune deficient, because who doesn't take a trip abroad and you're up early and up late. So, but I think that's just important for us all to remember that, I think it's going to touch us all more than just financially and more than just in our businesses. And we're going to see that as we keep going, and we're all going to know people. In fact, we're anxious to get my daughter home for, believe it or not, because we have another friend of ours who's 54 who is in the ICU on a ventilator, and we'd love to be able to have her donate her plasma to try and hopefully help him. But having said that, go ahead.
Oh, I was just going to say, thank you for sharing that. I wasn't specifically going to ask you about it, even though I knew, but I think it's really important, because I've really shared it with my kids. She had no known risk factors. She was young. She had traveled to Europe, is my understanding, and had come home, and it hit her pretty hard. And the reason she wasn't on a ventilator is she affected one lung. Is that correct, Jon?
Right. Her both. And to give you an idea that, so when people say, look, there's no protocols on this, there really, there's starting to be, but there really wasn't. Even the infectious disease doc said to us, hey, we're just winging this. And we went from daily updates and we actually had someone who flew us out there on their private plane. So we flew out there, and so we were very fortunate. So we went from having updates of, we think we're going to discharge her today. Oh no, her fever spiked again, to we're going to drain her left lung because it's so full of fluid. And so it was just kind of one of those, and they didn't know from day to day. But even the last few days she was in the ICU, the nurses only went in there to deliver meals, and they didn't go in anymore because of the PPE problem. They didn't go in to just give her medicine. They would lay out her medicine, and they taught her how to disconnect herself from all the monitors to go to the bathroom and everything. So it was really so we watched this all unfold because we didn't leave Florida until she was out of the hospital. So we really, believe it or not, haven't seen her since January. And so we're looking forward to hopefully getting, I often, people say, hey, can you give us an update? I say, I'm just waiting to be able to give her a hug. So.
Yeah. And it's really, I was not aware how long the virus stays live. So thank you for sharing that.
Yeah. And I don't think they really know, honestly, and I think they're all winging it, even on the guidance we get. So,
okay.
All right. So we're just going to kind of go through some of the act, the Coronavirus Aid Act, the aid, the relief, the Economic Securities Act, and I'll try and throw in some of the updates that have come out, and realize things are coming out. Like there's a Q&A and FAQ that's on the SBA's website, and I'll make sure Sharon has this and that we can get this posted. But they came out and they had 18 of them yesterday. Well, I checked right before this, and now there's 20. So they're going to continually update these FAQs that come in. So we'll put that link out there to make sure that everybody has access to that.
Okay.
Well, there we go. Okay. So here's what we're going to do today. We're going to look at, well, let me first go. Look, this is a little bit of a disclaimer. I am not your accountant. So I just want to make sure that if you have a question, that you seek professional guidance, or you call me outside of this, or because everybody's going to have their own situation. And so I just have to give the little disclaimer that we're not giving tax advice here. So the agenda, so money in your pocket, we're talking about the Paycheck Protection Program loan, what's commonly referred to as the EIDL, the Economic Injury Disaster Loan, and the Emergency Economic Injury Grants. We'll look at the Employee Retention Credit, the Recovery Rebate Credit, and then we'll talk a little bit about some tax law changes as a result of what happened here. So the Paycheck Protection Program, and before I go into the true Paycheck Protection Program, what everybody really has to understand, and everybody's run into their accountants here, that this is really the SBA program. And so when you think about the SBA, all the other rules apply unless otherwise changed. So if it was in the SBA before, it's still in the SBA. And this is just an overlay to the SBA, to the program, which is, a lot of people didn't really realize that when it first came out. They kind of thought this was all by itself. So when people would call me, I'd say, well, let me go back. I got to go check the SBA law first. And then you have to check with your banker who's really in the SBA to make sure that I'm even reading it the way the bankers are going to read it, because as an accountant, and even for the most part, even unless you do documents for a bank as a lawyer, this is not what we're used to doing. So, so here's what it is. It's 350 billion in loans. And then there was another report that came out that said it was only 349 billion. So I'm not sure what the $1 billion difference was. It was businesses with fewer than 500 employees. However, if you check the link that I put out for the FAQs, they said, well, you might be able to qualify if you have more than 500 employees under the SBA, but yet here it says you can't. So I'm not sure, and I haven't yet tried it for someone who has over 500. It's for sole proprietors, nonprofits, and really this is one of the only buckets of money for nonprofits with payroll. And then you have to have been in operation February 15th, 2020. And the covered period runs from February 15th, 2020 to June 30th, 2020. And 100%, go ahead.
I was going to jump in on that. The original version of the bill that went out of the Senate actually had a covered period. Well, it's the same covered period, but it allowed there was a 4-month calculation as opposed to an 8-week. So right. I'm jumping ahead. I'm sorry, John.
No worries, no worries. So, and I think the nice part about this is it's, almost everything as business entrepreneurs and having your own business, we have to personally guarantee. I mean, in fact, a lot of times when clients come to me and say, hey, I need a loan, I say, well, you're ready to personally guarantee your loan. Mm-hmm. No bank ever gives you money that you're not signing on the dotted line. And here, we're not signing on the dotted line. It's really kind of nice.
Yeah.
And there's no personal guarantee. And so, and here's the other. So then if you look at that fourth bullet point where we talk about the years and the interest. So per the law, so if you go to the 880 plus pages of documentation and you drill down, it says there's a maximum maturity rate of 10 years and an interest rate not to exceed 4%. So I would even say to most of my clients, if you don't even get it forgiven, that's still not a bad rate, right? So then the Treasury Department came out, right, with some guidance and said, no, it's going to be a 2-year loan and it's going to be an interest rate of 0.5%. And then the SBA on April 2nd said, well, wait a minute. They released an interim, it's called the PPP interim final rule. And it came out and said the interest rate is 1%. And for whatever's not forgiven, we think you should be turning your business around within the 2 years. So we're willing to let you ride for 2 years. So what you'll find, I think, is when you sign your note agreements, it will say 2 years if you've already been delivered your documents.
And in all fairness, John, I mean, with the way the rates, the loan amounts are calculated, it's set up such that almost everything should be forgiven if it's because it's based on payroll. If you as long as you maintain those payroll levels, is that right?
That's right, and we're going to go into that too as well. So when you get the money, what can you use it for? You can use it to cover your payroll, mortgage payments, rent, utilities, and any other debt service requirements. And then your banker is not allowed to charge you any loan fees or any prepayment fees. So that even works out.
Right.
The payments for any loan not forgiven. So, and don't confuse this with, do I owe money or not? What it really means is that you won't have to pay. The administrator, which is your bank, has the ability to say, well, you don't have to pay it for 6 months to 1 year after we give it to you. So let's say you were lucky enough to get a loan and then for whatever reason, business just wasn't there for you to hire your employees back. And you said, you know what, I'm just going to use this for something else. I'm going to just hang on to every penny. The business isn't there. Well, you still have 6 months before you would start to have to pay that back. Okay. So I think this is really kind of interesting. So when to apply. So starting April 3rd, it said small businesses and sole proprietorships. And what they've really done is they've pushed most sole proprietors to April 10th, is my understanding. But I had a couple slide through. All right. And then I also thought it was interesting that almost every bank's closed today. Today is April 10th. And that's independent contractors and self-employed. And the reason why I have these in red, sole proprietorships and self-employed, is I'm not sure what the difference is. Right. And so you can do the same thing and you can get to cover payroll and other certain expenses through these loans. So that's just a tongue-in-cheek slide because I think there's going to be a lot of issues here. And primarily so many loans have been applied for. So like my bank, for instance, when you logged onto their website, which I shouldn't probably say this, but several banks, when you log onto their website, they would come up with a note saying, we are no longer accepting applications. We're just getting through the ones we had. And then I logged back on and they said, okay, we're accepting applications now. So if you are looking to get into the filing for some money, I would say Monday, no later than Monday, because this is a first come, first serve game until
Right.
the second bill passes. And I think it's going to be really important.
The thing that I am noticing from people that I've talked to and what I did is I worked with the bank that I've had a long-term relationship with, and that has made all the difference in the world from what I'm seeing out there. I think there are some lenders that are helping people that have not had existing accounts with them, but going through, if you have a banker that you have worked with on a regular basis as a business owner, it's really critical to reach out to that person.
100%. And I would even more say that most of the banks are not, their primary objective is to first get to their clients. And if you're not their client, you're secondary. So if you're not at a big bank, so if you don't bank at Chase or you don't bank at BBVA Compass or you don't bank at Bank of America, then your best bet could be a small community bank. Right. That is not as busy. Otherwise, I think you could end up waiting forever behind those folks that they're already their clients. And that's just reality. They're all protecting relationships and those things.
And I use a small local bank and I have for years. And I think it made I was really glad that I had. So, but if you don't, there are resources out there. They're opening up for people who have not been able to get in line at Wells Fargo or at Chase.
All right. So how is the loan size determined? I have to tell you, this is the easiest math ever, right? And I'm going to tell you to forget like what a lot of banks, in fact, even a small bank that one of my clients was using, who I would tell you I would never use this bank, so I don't want to give that name out, but the spreadsheets we had to fill out for this was just unbelievable. Most banks are just letting us use the 2019 numbers, even though it said, can we have a rolling 12-month period to come up with the average payroll? And it's really easy. Just take your 2019 W-2s, divide them by 12, multiply by 2.5.
There you have it.
And there you have it. The only reason why I would tell you you might want to use actual is if all of a sudden you grew and there was a lot more employees, then it behooves you to try and get a payroll register and a payroll summary, because even it's April 10th, most likely you don't even have a 941 prepared yet from your payroll company or from a third-party accounting firm. So what I found is most banks have been extremely liberal on what you get to prove your payroll. Right?
I will tell you that I did mine originally for 2019, and they asked me to go back and do a rolling, and it actually increased my loan value by doing that rolling number. Right. Even though I didn't have a 941 yet, I was able to actually run my first quarter numbers. So I think it's a bank by bank preference is what I'm understanding.
Well, and that's the sad part, right? It's bank by bank instead of, and by the way, the SBA has said you could use 2019.
Right.
So my family, besides the fact that I'm a tax partner at Whitley Penn, my wife runs a small company. So we've also done this, and they just took the 2019 numbers and went on their way. Mm-hmm. So if you have seasonal employees, then they say use that 12-week period from the February 19th, 2019 and ending June 30th, 2019. And you can opt to March 1st, so it's not necessarily February 19th. If you were not, what happens if you weren't in business, right? Then you're going and you're saying, okay, February 15th, 19 to June 30th, 19, and then it's 2.5, your average monthly payroll cost between January 20th and February 29th. So they're saying just take those 2 months of January. So if you weren't in business between February 15th of 2019 and June 30th of 2019, just look at the 2 months of the beginning of 2020, and that will get you the money where you need to be. Again, it's just 2.5 times that amount of money. So what's a payroll cost? This has been, you would think this would be the easiest conversation ever. And what's amazing is how this has been so confused. I've had more emails from clients going, I'm not getting anything anymore. Because everybody thought you could put because it said for sole proprietors or independent contractors, everybody thought that if you're an independent contractor and you got a 1099 that you were lumped into compensation. Well, as we go through, what they've really done is tried to make sure nobody could double dip here.
Right.
And so if they had allowed 1099s in compensation and the independent contractors and into your compensation numbers, then they would have allowed people to double dip because there's a separate program for those folks. So it's compensation and it's gross salary, by the way. There was also a lot of confusion about this because what they did is they put into the law, there's a couple of code sections in the law, and they talked about Chapter 24, which deals with payroll taxes. And so everybody said, oh, well, that means it's my net salary. Well, they finally clarified this in an FAQ too. So, and that was on April 2nd, they finally clarified this, and they clarified it again. So that's out there. And they clarified the 1099 question. So it's salaries and wages. So, and it's capped at $100,000. What does that mean? And it's independent. So here's the other side. So let's say you make your gross compensation is $105,000. Well, that means you put $100,000 divided by 12. So 8,000 and change. But what you get to add to that is the healthcare costs. So it's not total benefits. it's not your total cost structure for an employee is capped at 100. It's just the salaries, and then you add your benefits on a different line for your group health benefits, which is kind of nice. Go ahead.
John, I have a question. Does this include the compensation paid to the owner? Say if you're an S Corp and you give yourself a W-2 in addition to distributions, does this include the owner's salary and insurance benefits?
The answer to that is yes. Now, it's not life insurance and it's not disability insurance, it's group health insurance.
Right.
But what it doesn't include is your distributions. And again, even as the owner, you're capped at 100.
Right.
Right.
Okay.
So for a sole proprietor and an independent contractor, that's also, well, what if you pay people, right? So you get a large 1099 and then you have a bunch of folks hired underneath you. And that's why you would be putting in for their wages and the money you would be paying out for your employees under your sole proprietorship. That if you read on towards the end of that second bullet, it said net earnings from self-employment. What does that mean? So just think about a Schedule C. And one could argue this is for a partnership, but there's not any guidance on this yet. So it's a little difficult. Maybe they'll have an FAQ that'll come out now that some folks are starting, since that opened up today, and they'll realize there's more questions, because they've answered a lot of questions this week, even though last Friday was when we could start putting in applications for loans. So what we're not sure of, and what I can tell you what we've done for some clients, we don't know if we're going to be right or not, by the way, but is we've given them a 2019 Schedule C if they're a sole proprietor, because you're not going to have, so Sharon, as you had said, you gave them the 940s and the 941s, and then you did the rolling for the first quarter.
Correct.
Well, if you're a sole proprietor and you don't have any employees, and you would never be paying yourself a salary, then you don't have that information to give them, except for here's my net profit, my net self-employment income, my profit. And so the hard part about this is that so many folks really do such a great job of tax planning to come out at zero, that if you go to last 2019, if you've already filed your tax return and you're at zero, well, now you've got to figure out what you want to do. If you haven't filed your tax return, then it probably behooves you not to file it and not to be as aggressive on your expenses, because you're not going to get any money. At least that's our thought process, right? But then realize the webs people weave, that you have to really be careful, because you don't want to, if you've been really aggressive, if your tax preparer has been very aggressive and gotten you down, because Sharon, you and I had this conversation before we went on. So there's people who just have paid no money, that and it may not even be that it's aggressive, right? They've used the tax law to their advantage in tax planning.
Correct.
And if you've done that and you've been at zero, and then all of a sudden now this year you're going, wait, I don't want to do that. Well, you may make sure you have those serious conversations with your accountant, because you could be opening up another can of worms to your prior years.
Correct.
Right. So the other things that get thrown in there is vacation, parental, family, medical, sick leave. So allowance for dismissal or separation, group health insurance benefits, which we talked about, any type of retirement benefits, 401ks, profit sharing, and then any state or local tax assessed on the compensation. So since we're in Texas, like your Texas Workforce Commission taxes. And then what don't they include? So here's what they finally came out and said about payroll taxes, is it's what the payroll tax, the federal payroll tax expense, the FICA and Medicare, that's the employer's responsibility. Okay, and that was what they came out with in the FAQ. Then any compensation, if you're paying someone who's overseas, that doesn't count. And then also what doesn't count is qualified sick leave or family medical leave, for which a credit is allowed under the Coronavirus Relief Act. So if you've said, okay, I'm going to pay someone, which we'll talk a little bit about that later, but if I pay someone and get a credit someplace else, they're not going to let you get a credit again. They're not going to let you do that. All right. So here's the way to look at it. So you have XYZ company, they apply for a paycheck protection loan. The business had $600,000 in payroll costs for the prior year for a monthly average of $50,000. XYZ company is entitled to a fully guaranteed loan, assuming it's made before December 31st, 2020. And by the way, if you don't make it before December 31st, 2020, you're probably not getting anything. So, and it's equal to the lesser of $125,000, $50,000 in average payroll costs, right? So it's 2.5 or $10 million. So depending on the company size. So most likely, so it's going to be the 125 here. So that's what you're going to get. So then how can it be used? And this also is a little, people have tried to figure this out too. So it can be used for payroll costs, as we've noted above, like in the prior slides. Continuation of all your benefit packages, your employee salaries, commissions, or other compensation items, payments of interest on any mortgage obligations, but not any prepayment, right? So you can't go in and pay off principal early. And then it had to be in existence before February 15th, 2019. So you can't have just gone out and borrowed money today and then start paying that interest. Rent, utilities, and then, like I said, the interest on any other debt obligation that was incurred before that covered period. So if you have just an operating loan, you can cover that interest out of this money, and that works.
Jon, I think this is kind of a confusing thing for people, because I've heard people say, oh, I add in my rent to determine the loan amount, but actually there's the formula contemplates, correct me if I'm wrong, that 75% of the loan proceeds will be used for payroll, with the other 25% being used for rent, mortgage interest, utilities, etc. And so they're two different calculations. Is that right?
That's right. So so if you think about what you're able to borrow, which is kind of interesting, you're able to borrow 2.5%, 2.5%, sorry, 2.5 times your average monthly payroll, at which point you have 8 weeks to spend 2.5 times your average monthly payroll. So let's just say you borrowed $10,000. So you had payroll of $4,000, an average payroll of $4,000 a month. Well, if you have 8 weeks, you're only going to spend 8. You have $2,000 extra dollars to figure out what to do with. So that's where the rent, utilities, mortgage interest comes into play, but that has been confusing. People have confused, this is how I'm going to calculate the money I get versus this is how I'm going to get forgiven for the money I spend, right? So the rent doesn't even go in there. And by the way, the bankers weren't very helpful in this process either, because a lot of them, so I think at the beginning I told you I had this client and I had to fill out spreadsheet after spreadsheet for him. And by the way, I felt so bad for this poor guy. He's a really nice man, but what happened is that his bank kept asking for this information they really didn't need. So they wanted to know exactly what he was projected his forgiveness would be, what he was going to spend his money on. And then we had to fill out, okay, here's the loan we think we're going to get. Here's exactly how we're going to spend it. And I was thinking, you are making this so much more difficult than this really needs to be. But even in their spreadsheet, they made it pretty clear where the 2.5, the multiplier came from for the average payroll cost. But even on the top, my directive was to use 2019, but they put that it was a rolling 12 months.
Right.
And so I said, look, I got to get clarification on this, because we're using 19, but you're telling me I've got a rolling 12 months. And so some of the banks were confusing on this, as well as they were throwing in the 1099s, and they were asking clients for all of this information, right, that they really didn't need. So and part of it was, it's like anything. If you think about the Tax Cuts and Jobs Act, that came out in a firestorm, and there were a lot of questions and a lot of clarifications that had to come out about that, and a lot of guidance that had to come out around that. I think anything that's done in a firestorm, and I'm not saying this shouldn't have been done in a firestorm, by the way, that there's going to be a lot of questions about, because I think if you go read the actual law, I think what created a lot of confusion was like a comma was missing or something like that.
And Jon, this gets us to the question I had earlier about the 8-week period, because the original bill, the Senate bill that passed, actually included a 4-month period, right? That those funds, and it was 4 times that average payroll, and then that calculation, my understanding, also included your rent and all of these other things, and then you had 4 months to spend it. And so after it came out of the House and the compromise bill, it ended up with, we've got 2.5 times the payroll, 8 weeks of a forgiveness period.
That's right. And I think we're going to see, I mean, my personal projection is we're going to see another bill. They're already talking about another bill. I mean, the president even, I believe, a couple days ago announced a $250 billion bill. So we'll see some other monies free up too. That will, so, you know, and here's just kind of how the loan forgiveness would work. Oh, and by the way, you have the 8-week, I want to make sure everybody sees this, but it's the 8 weeks beginning on the date of the loan. So, you know, I think what's going to happen is if you've suspended your payroll, not knowing what was going to happen because you hadn't any money left, then you need to turn around and pay attention to your bank account, because you may, once you've signed your loan docs, all of a sudden the money's just going to hit your account. I mean, I've had some clients get funded already. So.
And do you recommend that people use segregated accounts for those funds so it's more, you don't think that's necessary?
I don't think that's necessary.
Okay.
At all. I mean, I think what's going to happen is the bank's going to, because most of the time the bank, you've already given the bank that information, and it's just it's the expenses you're supposed to have anyway.
Okay.
So, and you're going to have to report that to the lender, and the lender is going to be verifying your number of employees, the pay rates, the canceled checks. It may just be a copy of your payroll register. They may not ask for all that data. It's going to be up to you, between you and your banker. The banks are really the gatekeepers on this. So,
okay,
much more so than the accountants are. So loan forgiveness, continuing the previous example, you have XYZ company in the first 8 weeks after the business borrows the $125,000. They pay $100,000 in payroll costs, mortgage interest, and utility payments. They're eligible to have the entire loan forgiven. The forgiveness will not create taxable income. In addition, because of the deferment rules, any payments due on the remaining $25,000 of there will not be due for 6 months to start making payments on those loans. So,
John, we just had somebody in the chat box say, the only reason I'm bringing this up now is because you just talked about it, is somebody said, can you talk a little bit more about businesses with suspended payroll? Because my guess is there are some businesses that have had to do that, and they're waiting on the proceeds from this loan.
just kick it back up again as soon as you get the loan. Remember, you're submitting that 8-week period of time. Here's the other interesting part. And I guarantee you there are businesses that are, if you have more than just a handful of employees and you're trying to decide what to do, you may say, well, I'm going to get all of this money. My average payroll is X, and I've got 0.5 extra. It may pay. There may be folks making decisions over keeping people for 8 weeks because of the money they're going to get on an interest-free bearing loan and forgiven versus letting someone go. Because there are rules. You can't deplete your workforce by too much, right? So you can't, right? You can't, otherwise there's some rules about the calculations that go in there if you fire too many people and those things. So again, about what your forgiveness will be. So again, there's going to be people who make some calculated decisions on this. And that'll be obviously a decision that people need to work with their business advisor to figure that out and how that's going to work. But no, that's a great question. There's a lot of businesses that, in fact, I think one of the questions, Sharon, you had at one point, and when we were visiting earlier, was, well, do you have to hire the same people?
Right. I mean, I had an employee leave during this time period for totally unrelated reasons, but so that changes my numbers.
But the answer is you don't. You can hire, right? So they're going to count people and count dollars. So if you have 2 employees that you said, you still have 2 employees. Did you reduce their wages? So if you said you had $50,000 of wages, you still have 50. And there was an FAQ on this as well that said it doesn't have to be the same people, which is kind of an interesting dynamic, right? But it's the dollars. So remember, it's the dollars. So they're looking at dollars. We look at people because that's what we do, but they're looking at dollars. Okay. And again, and here's I say I'm always drinking through a fire hose as I'm looking at the regulations here. And one of the reasons why I say I'm always drinking through a fire hose, because what I just told you, they could come out with an FAQ tomorrow and change their mind, right? Or they could come out with it before the end of the day. So I think it's always important to always go look at the source documents, because the source documents and the guidance is changing I don't want to even say daily. I think it's changing hourly because, like I said, I checked the FAQ this morning and there was 19. I checked it right before this phone call and now there was up to 20. And I'm curious when we get off the phone, if it will be, or off this Zoom call, if it will be up to 21 or 22. So I think we're always getting new guidance and things are being changed on us. Usually trying to make it a little bit easier, but not all the time. So the amount of forgiving can be reduced if it reduces its workforce during the 8-week period when compared to other periods, right, which we just talked about, right? If you reduces the salary wages paid to an employee who's earned less than $100,000 in an annualized salary by more than 25% during the covered period. And the reduction can be avoided if the employer rehires or increases the employee's pay by June 30th. But I don't know how they're, again, that's not what you're really, the 8 weeks, I guess if you get the money now, you'd have to go back to the bank and prove it, but your 8-week period's already up. So they really haven't answered how they're going to deal with that equation if you go beyond that. So everything we talked about up till now was the PPP loan, and that was like the big buzz. Everybody wanted the PPP loan. And why did everybody want the PPP loan? Because that loan is forgivable, right? That loan is, as I said at the very beginning of that section, it was free money. And so if you think about free money, we would all want free money. The other loan program is the EIDL loan, which is the Economic Injury Disaster Loan and Emergency Economic Injury Grants. And I think, what is this? This is lower interest rate loans. It's up to $2 million with potential deferment, right? So we've seen a couple different, how long that you can defer your payments, and we'll still see what happens. Honestly, I don't know anybody who's received this money yet, and we'll talk about that in a minute. But who is eligible? And it's the small businesses, including sole proprietors, independent contractors, cooperatives, employee-owned businesses, private nonprofits, tribal small businesses. So this is, you don't have any employees, where do you go right away? And this was what this was designed for. So this was the free $10,000 advance that everybody thought they were going to get. And I encourage, Sharon, I even told you to go apply for it.
I did, and I still haven't heard anything. I've got my little form that got printed out from the SBA that gave me a number, but they say you will hear from us, and that's it.
and have you tried to go find your number any place to check in on this?
No, but
okay.
Yeah.
well, clearly I have, and guess what? I can't find anything in it. The Hawaiian senator, Schatz, I believe his name is, said, I think they're going to change this. To give everybody an idea, in the tax bill, I think they had allocated about $17 billion for this. There was maybe $383 billion, a little less than $400 billion requested. So, which is why nobody's received any money yet. And if someone on this phone call, if anybody knows someone who has, that's great, but nobody I know has. I think they bit off more than they can chew, because they said, hey, as soon as you submit, we'll glance at it. We'll give you the $10,000 within 3 days. And that first original grant of $10,000 does not have to be paid back. And you could use it for anything.
Now, my understanding is, what if because it also gets subtracted from anything you obtain through the PPP loan, but can you use that $10,000 for a different 8-week period or for a different period on payroll and rent?
They don't. This is a loan, so the grant, you can use it for anything. You're not supposed to use it for the same thing. Well, they were going to subtract it from your PPP loan because they're not going to give you free money twice.
Correct.
Okay, so again, it goes back to the double dipping. And then it said any loans, and so this is going to be your typical SBA loan. So this is where I would expect, and again, I don't know how they're doing this because I've never had a disaster loan, but my expectation is once you put this into the SBA, it's going to get assigned to some bank. You're going to get an email or some correspondence asking you for more documentation, because this was a 5-minute deal. It didn't take anybody more than 5 or 10 minutes to apply for this. You put, here's my gross receipts, here's who owns this deal, and here's how many employees I have. Thank you very much. And that was it. So they don't have enough documentation yet to really give you the true SBA loan that I think they're going to eventually need. But this was the free money everybody talked about before the PPP loan. What some folks are saying, they're going to limit it now, which again is a horrible thing, I think, because if you're a sole proprietor without any employees, I think this was meant for you. And so one of the ideas is, well, we're just going to give you $1,000 per employee. And then someone else said, well, maybe it's $500 per employee. But I'm not sure if that's going to be the right answer. So we don't really know what's going to happen. They're trying to figure out what to do because so much was requested.
Which is why no one's heard anything yet.
That's right.
They still haven't figured it out.
Yeah, I know people who have received their PPP money already. Like the money's in the bank.
Mm-hmm.
Yeah, the money's already in the bank. And my expectation is we'll see a lot more of those folks. All right, so the employee retention credit. So this is a credit against the qualifying employer's portion of Social Security tax for each quarter in 2020. So remember, this is the employer's portion. It's not all the employees. So the value is 50% of the qualified wages with respect to each qualifying employee, but it's capped to $10,000 per employee. And so I'm not going to, in the essence of time, I'm not going to spend a lot of time on this slide because when you were done, okay, I'm going to go to the next slide. So there's all the reasons that we're going to post the slide deck so you can see them. But on the second slide here, if you look down at the bottom, if you take the Paycheck Protection Loan, then you don't get this. You can't use this credit anyway. And so
this is my question, Jon. Is there a reason this would be more advantageous to some companies rather than the PPP?
Not at all. Not at all.
Okay.
I don't think so. I mean, I can't figure out why it would be, right? Well, I mean, I guess maybe the only reason, because if you think about it, if you think about the math, right? It's the employer's portion. So it's $10,000 times Social Security, 6.2%. So it's a credit of $620 per employee for $10,000 versus having, if you paid someone
payroll
times your payroll, right? So you can see where that, this was done at a different, they thought about it, but again, which is why I'm not spending a whole lot of time on this. By the way, if you use a PEO, this is important. If you use a PEO and the retention credit, it belongs to you. If you use a PEO, even for the PPP loan, your employees belong to you, not the PEO.
What is a PEO?
It's the employment organization. It's a third-party employment organization that handles benefits and people who just they file. And what happens is they're really not your employee.
They just manage your payroll.
Well, they manage your payroll, your benefit package, and your employees, quote unquote, are not really under your EIN; they're under the PEOs.
Okay.
Right. So, all right. So then they had another one, the delayment of employer payroll taxes, and I don't know why anybody would do this, but let's say like you were really strapped for cash. That says but again, it's the employer's share, so you get a free loan basically. So you can subtract that $620 on that $10,000 I just talked about, and you can subtract that out. That it would then be due by December 31st of 2021 and December 31st of 2022 at 50%. But again, if you get the PPP loan, if you look at that fourth bullet point, you don't get that either. And so part of me says that most people are not going to do this either. But what you can do, so now let's just keep walking down this path. What you could do, and the IRS has issued guidance on this, is they've said, well, what if you don't know if you're going to get the PPP loan? You've applied for it, you're waiting on it, you don't really know, and you're trying to figure it out. Then what you could do is hold that money, not make your payroll tax deposit, which I don't really encourage this, by the way, because it's a dangerous game.
Mm-hmm.
And then once you get the PPP loan, you make your employment tax payment late. But you always have to do the trustee portion. So it's not that you're going to get that much, it's only 50%. It's the employer's share. So it's not a lot of money, and it's a lot of risk, I think, because if you get the PPP loan, you've got to then pay all those taxes. And what the IRS has said is we're all used to, if we pay employment taxes late, there's lots of penalties and interest on there. What they have said, if you pay this late in expectation of getting the PPP loan, we will waive the interest and penalties. Now, I'm not sure how they're really going to do that, if they're going to create some checkbox on the 941 or something that would tell us why you paid it late. All right, individual recovery rebate. So, how it will work. So this is the money that with the $1,200 that we all heard about. So the IRS is going to, right? Like this is the free money, the checks that are supposed to start rolling out or the direct deposits. So if you haven't filed, the IRS is going to look at your 2018 return. If you didn't file 19 or 18, but you're on Social Security, they're going to look at your Social Security benefit statement. Okay. Once they look at your return, they're going to cut you a check. It's $1,200 if you're single, $2,400 if you're married. This has been all over the news. Plus $500 per child. So all of a sudden, your kids become worth $500 again. This is not associated with your tax liability or the dependent on you having earned a minimum amount of qualifying income just based upon your AGI. What you will need to get a check, you got to have a valid Social Security number for yourself, your spouse, and any children. If you're claimed on it as a dependent on someone else's return, you will not receive a check. And then, of course, like everything, there's going to be phase out. So if you look at your adjusted gross income, it's $75,000 if you're single, $150,000 if you're married. Once you go over those thresholds, you lose $5 for every $100 your AGI exceeds the threshold. So single kids with no kids, if you're single with no kids, you get $1,200, and then I give you the phase out. Married with no kids, $2,400. Scott starts phasing out at $198. Married with 2 kids, do $3,400. It's completely phased out at $218, or it's completely phased out at $198. Sorry, if you're married with no kids. So you can kind of see that for a lot of people that aren't going to get this too, right? So if you think about the top 10%, 10 to 15% of taxpayers probably won't get this.
Well, I have kind of a question. Most of us, I don't know anybody that's filed a 2019 return yet, and you know me, I'm usually waiting till October.
Hey, have we filed your 16 return yet? No, I'm just kidding.
And so, but my question is what if you were above that limit in 2018, but maybe your income dropped a little bit in 2019, and you may qualify for this in 2019? Do you get to go back and recapture what you didn't get that automatic check for in some way or another?
Well, so that's a really good question. So they say that it's a stimulus payment, and it's really an advance credit that you'll compute on your 2020 tax return. So somehow it should, but again, not having seen the 2020 tax return yet, I can't really answer that question. What I have said to folks is if like a lot of people made more money in 19 than they did in 18. And then we all know that most of us are going to make less in 2020 than we did in 19. And so maybe unless you're a disaster coach, but at the end of the day, what they've said is you're going to compute the credit based on your 2020 tax return. And if your computation is more than the check you received, you're going to get a credit on your 2020 return. So if you didn't get anything, the idea, right? If your computation is less than the check you received, what we don't know, and they've said, yeah, we're going to recapture it. But again, we have to see what they're going to do. Is it potential income, potential taxes, or is it free? There's a group that says you just get to keep it. There's a group that says, oh no, they're going to make you pay tax on it. So again, we'll have to see what happens. And that's going to come between now and December 31st, and it'll be directly deposited if you put that in on your tax return. Like if you've given the information on your personal taxes that has your routing number and your account number, that'll just go right into your bank account. So you should pay attention to that. Okay, just tax law changes. Any person, so here's what's interesting is any person with any type of tax bill between April 1st and July 15th, everything's at April 15th. So whatever you think of as due, but we'll talk about a few things that doesn't include. They finally just came out, I want to tell you, yesterday maybe. I may have my days messed up. Sorry, I always forget what day it is now that I just come to the same place. I never leave my house. But they just came out with yesterday or the day before, and they finally said that July 15th is going to be the new date for everything. So up until then, the assumption was, while you didn't have to pay your quarterly estimate on April 15th, that you were going to have to pay the second quarterly estimate on June 15th before you ever paid your tax bill in your first quarter. They finally just pushed everything to July 15th, right? So, but having said that, your employment tax returns that are due this month, those are still due. Texas
So still file your 941s, your Texas Workforce Commission.
Well, let me talk about
returns.
Texas. Texas has said, we don't want you to even try before the 15th, and they've moved it up to May 15th. So you still have to file it, but they've extended that date. And in a lot of states, most states have also extended their filings, by the way. And this is the person's an individual trust, an estate or corporation or any type of unincorporated business. There's certain things that haven't been extended, and that's the 706 estate returns. Gift returns have been extended. And then again, some of those items that are due between April 15th and July 15th, which we talked about, the payroll tax returns. So what else does that extend? Well, that also extended HSAs, IRA funding, pension plans, if you have an April 15th filer, for personal. So they really did this. And another item that they just came out with and extended was, what if you have a 2016 return you haven't filed yet? And you would do a refund. It's an unclaimed refund. Well, the IRS has this code section out there, and this is amazing. They've never done this, by the way. They have this code section out there, and it's called a barred refund, which means if I filed my 2015 tax return today, and I was due $100,000, the IRS just gets to keep it. Now, they can use it if they decide to audit my 2015 return, because remember, the statute of limitations doesn't apply if you don't file. They decide to audit that, I can use that $100,000 overpayment to cure any deficiencies I might have, but they're not going to give it to me, and you can't roll it forward. It's called a barred refund. What they did is, we have clients out there that have not filed a 16 tax return, they turned around and they said, we're going to move that deadline to July 15th too. So now you have till then to be able to file. And they also just came out yesterday, and I sent another email because I'm curious about this, is they are not processing any paper returns. Well, why is this a problem? Okay, this is a real problem because if you have a 1040X, an amended, right, you have to file it by paper. They also came out, and there was also with this is a little beyond the scope of some of the changes because this is all brand new. This just came out in the last day or two. They came out with about partnership tax returns that they had gone in. If you fell under the new provisions, which everybody did, then now the audit, you couldn't file a 1065X. You had to do something else. Well, now they want you to file a 1065X and submit it electronically because they don't want anything by paper. And it used to be if you did a 1065X, you had to do it by paper.
Now, John, my understanding that they've also suspended so if anybody had any tax issues, they've suspended the enforcement provisions right now. Is that correct?
That's correct. The sad part is, the answer to that is yes, they have. The sad part of that is, and I'm just waiting for a client to call me because I don't think they turn their computers off. So what happens is the computer may be spitting out the notices, but someone has to affirmatively go in and push the button to levy to get the money. So what I haven't had anybody call me and say, hey, I just got a notice that said they're doing this. So I don't know, how they're going to turn their computers off, but we'll just have to see what happens. But no one's processing paper at the IRS. So also we've been trying to push the IRS to take electronic signatures and emails, and maybe this is the way they're going to start doing that. I don't know. All right, so another exciting, well, I say exciting, using retirement funds for the coronavirus costs. Okay, so what the IRS came out and said is you can now take money out of your 401k plan if you have an employer plan. They've also put an IRA in there as well if you look at 408A of the Internal Revenue Code. And you can take $100,000 out without the 10% penalty. And you can use that to pay for anything, basically. But then you have the opportunity to fund it back over a 3-year period beginning in 2020. And so you can avoid income recognition by repaying the entire distribution within 3 years of receiving it. So it's like an interest-free loan. And so part of the problem, though, I see in this deal is that, and I'm not a financial advisor, so I tell everybody to connect with their financial advisor. Depending on where if you had your money sitting in a cash account because you liquidated before all this happened, well, then you have all your money. But if you were invested, you're probably down like everybody else is.
Right.
So they want to liquidate.
Not real wise.
I don't know.
I have a question, John, because it appears, because I thought when I heard this, you can take money out of your qualified plan, but it looks like there are limitations on it. It has to be used by an individual that's been diagnosed with COVID-19, has a spouse or dependent that's diagnosed with it, or is experienced financial consequences as a result of being quarantined, furloughed, or laid off. So it really isn't anybody can take advantage of this. You have to fall under those criteria. Is that right?
That's right. And it's kind of the same thing like the banks, right? So, I mean, who experiences adverse consequences as a result of being quarantined? Well, maybe all of us have. I mean,
Okay.
if we haven't killed our kids yet, right? But furloughed or laid off. But here's the other one. What if you can't work due to childcare? Right?
Yeah, right.
So, I mean, I think, and again, I think this is really going to come down to your financial advisor, what they're willing to accept is your evidence. So again, it's kind of like the banker and the loans. They're going to have, I think there's going to be a lot of things. So what I've done, so this is just kind of a cover summary slide. Behind this is just a little more detail if you want it on that, right? Talks about RMDs. Oh, sorry, just a little more detail on the other two slides behind it. So in terms of how this works, because you've always been able to take loans from a qualified plan of 50,000, they just increased it.
Okay.
Another one that I think is important for us to look at is the RMD. And actually, and if you look on that front slide, it was right down here, RMD distributions are temporarily waived for 2020. And this is really important because what if you had started taking the required minimum distribution, if you were old enough, 72, and you were taking that required minimum distribution, that perhaps you really don't need it, but you just have to take the money out of your IRA or retirement plan, you're not working anymore, you could go back. And in fact, we've worked on this. I did this with my parents actually, and they paid the money back within, you have 60 days of your distribution. So if you just took it out like middle of February, you could put that back in before the middle of April, and then you can get your money back working for you, and they're waiving the requirement. This does kick back in 2021. All right. Again, defined benefit plans, funding requirements, including quarterly contributions, may be deferred till January 1st, 2021. And so there's some other plan sponsor opportunities in terms of how you fund your funded plans if you have a DB plan. Charitable contributions, they said now they're going to give everybody $300 above the line. So, and that's for 2020 and beyond. So that was great. They also said if you do itemize it, you are limited to 60%. So if you're super wealthy, you can now take up to 100% of your AGI and you can carry the rest of it forward. And they increase for corporate donors to 25%. The student loan, they've always it allows an employer to pay up to $5,250 in 2020 of an employee student loan obligation on a tax-free basis. So it used to be that you had to disclose certain items, and you're not supposed to reduce your employees' wages as a result of this either. So it's just a nice little benefit you could give to someone if you're trying to figure out, you can't give them a raise, but right.
Or if you have college kids for
right.
Children that you want to
That's
enslave.
Right. That's right. So, and remember though, if to the extent the employer pays, you can't deduct the student loan interest.
Correct.
Right. Okay. Qualified improvement. This, like, it should be a big deal, but it's probably not such a big deal. They left a little part on the Tax Cuts and Jobs Act out, and they kept talking about curing the problem. All they did was finally cure the problem that if you have qualified improvement property, which is improvements made to the interior portion of a non-residential building anytime after it was placed in service, then it was putting it at the 15-year life, allowing it for bonus depreciation. And what they've said is you now can go back, and it's retroactive to January 1st, 18, and you could go back now and amend that tax return.
But you can't file it because they're not taking paper.
Well, right. Well, that's only if it's a personal. Corporate returns and business returns, you can do electronic amended filings. It's only 1040s that they have not allowed that for us yet. Net operating loss rules, this is kind of a nice deal. It used to be that if you have a corporation and you had an NOL, and an individual, by the way, before the CARES Act, there were no carrybacks. Now it's indefinite. And then it was no carrybacks, indefinite carry forward, and it could offset 80% of your taxable income. So you were always, if you were making money, you still have 20 cents you were always paying tax on. After the CARES Act, if you had a loss from 18, 19, or 20, you can carry it back up to 5 years. And that's kind of even beyond the old rule, which was only 3 years. losses carried to 2019 and 2020 will be permitted to offset 100% of taxable income instead of just 80. So that's kind of a nice deal also. So I do foresee this is kind of an immediate free up of cash, because if you made money now but you lost money in 18, right? And if you're losing money in 19, you lose, and definitively there'll be a lot of people that are losing money in 20. You can, well, in 20 you can go all the way back now to 16 or 15 to get money back. So that's kind of nice. And you think about this, we're going all the way back to 13 now, possibly, to get money back from 2013. This was the excess business loss. So if you have a flow-through entity or sole proprietor and you lost a bunch of money, they had limited you to $250,000 if you were single and $500,000 if you were married filing joint. This was part of the Tax Cuts and Jobs Act. And then anything else was carried forward. I have a couple clients who are really benefiting from this, because now there's a halt to that. And so if you reported a loss limitation on your 2018 return, or you already filed 19, you probably should take a good look at this. It does go back into effect for 2021. It's like a 1-year bonus, so to speak. So, to go back, look at 18, how did it affect you? Were you limited? And I had a client that was limited by $1.2 million. So he's going to get a nice tax break when we go back.
Well, and so this means another effect of everything that we've gone through is we're going to see an increase in some amended returns probably for
100%.
people. So they can, okay.
100%.
When we can file paper.
That's right.
Okay.
Well, that's right. And then, and we're not going to cover that. I thought I'd leave that slide.
I have some questions, and I'm going to open it up to people if you want to actually add, but I have one person that has asked, because a lot of us that are in the service industry, especially lawyers, we compensate of our employees like, billed and collected hours. How do you, I believe, how does that impact your overall payroll calculation, or how you spend that 80%, that 80%? Not that 80%, but that 8 weeks, spend those funds in the 8 weeks.
That, I think that's where, when you're looking at that, you're almost going to have to prepay people for work they haven't done. If your clients aren't walking through the door and you have the lawyers that you're paying them on an hourly basis, sort of for billed hours, because and you're truly paying them, you're not giving them a 1099 of counsel, right? Then I think what's going to happen is you're going to have to pay them to prove that you're paying them, and have some agreements with them on how that's going to work, because you're going to have to, because your average payroll will probably still be the same, because you're still going to take that 12-month rolling period, 2.5. Right. But clearly no one's really working right now. I mean, people are working half speed right now. In fact, I had a lawyer call me yesterday, and he says he's trying to fit his 2 hours. He's trying to figure out how he does the 2 hours and the 5 hours he's got.
Well, and I have one friend that 100% of her attorney compensation it's all eat what you kill. And so she's doing a draw. She's giving them a draw over this 8-week period. And that's because last year it was really good. Her payroll was at one point, and right now work is down, but she's expecting it to come back. So
well, it's creative. It's going to have to be creative for 2 months. Remember the reason why the law is there, why they're doing the PPP loan, and the objective of that PPP loan is not to give the business owners all the money. It's to give the business owners the money for the average payroll to be able to put the money in the employees' hands. So
which in turn puts it into the economy.
So if you think about what you're doing, is you're saying, well, gee, I know our revenues are down, but we want to make sure you still have money. And that's why the government's forgiving it, knowing that, well, you may not have enough collections to really have paid for those wages, but this is going to keep the money pumping.
Do I have it? Yeah. So that was a very good question, Lisa. Thanks for that question. Does anybody else have any questions? Because I can unmute. If you raise your hand, I can unmute you and you can ask it, or you can type it into the chat.
Sorry about that.
And I know, go ahead.
If you guys have questions, we have an email set up that's caresact@whitleypenn.com that myself and someone else monitors. And then, as well as, if you go to our website, so, one of the things that I think we've been really great at, and we've gotten several compliments on, is we've been pretty timely with our updates. So we're trying to put something, whenever we get something new, we're sticking it out there. And if you go to our website, on the upper right side of the website, it says sign up. And if you put your email in there, you'll get our alerts. And we have there's a COVID on the left side, there's where it just says COVID-19, and you'll go there and you can see what all of our alerts are. And this presentation I gave with one of my senior managers, Kristen, and this same presentation is also posted on our website. And Sharon's going to post it. So maybe
Right.
it'll, every presentation is a little different. So this has more up-to-date information in this recording than a different recording.
And this will be also posted on my website as well, and we will be sending out the link. And if you would like, and then we will be uploading the recording of this. But I just want to tell everybody that the Whitley Penn updates have been awesome. So I've signed up and I get those updates, and it's giving me almost real-time information. Y'all are very quick. Now we have another question. Somebody asked about, what about businesses like nail salons or dental offices that are forced closed for now? And I'm assuming, I'm asking the person who asked the question, are you also paying basically on an eat what you kill basis, or where they're paid according to what they, like straight commission? Is that, I believe that was Danielle. And I think she's typing.
It's hourly. It says, so this is going to be very similar to like the dentists. They're applying for the PPP loans to be just so they can still pay their employees even though they're not working during the 8-week period. Now remember, the idea is that, and I mean, this is not to be political, but if we listen to, everybody wants to go back to work pretty soon. So if we open back up in May, by April, so in Dallas, since we're all in the DFW Metroplex, let's say April 30th, and we follow China and we open back up after being kind of quarantined for 6 to 8 weeks. And so we're all back to work in May. What it does is it enables, once that money comes in, you could start paying those employees. A lot of the nail salons and the like hair salons, as long as they're true employees, remember the PPP loan covers that. It's just the 1099 folks. So
Right.
There are some nail salons that actually pay W-2s. And there's some nail salons where if I'm a nail salon or a beautician, I'm going to go rent my space and you're just going to give me money. And so then that's the self-employed, and you got to look at that net self-employment income. And that goes back to what we talked about earlier on about trying to prove that revenue and how we might walk into what we're doing on that financial scheme.
Okay. Thank you for that question though. And that is a good question. And I think most of us are a little slower right now. We're still working. We are. But it's nice to have just that injection of cash if it comes, to make sure that you can keep your employees, because the cost of even having to start back up with new employees after this is over is also costly. I mean, we're all going to be impacted by this financially. There's no way around it. But if we can lessen that impact by taking advantage of this program, it enables us to plan, to keep our employees, and to start back up without having to restart over with training and finding new employees. That's really the intent of it, and I think it will serve that purpose. Does anybody else have a question? Because I think, and thank y'all for staying with us. I'm going to post this on my website, and you will all have the link to sign up for the updates from Whitley Penn. I highly encourage it because they're like I said, they're almost in real time, and I really appreciate Jon coming on and agreeing to this. This recording will be uploaded to our site as well, ramagefamilylawfirm.com, as well as beyondtherelationship.com, and it will also be linked to. Are you going to link this also to yours as well, Jon?
I have no idea how to do that, but I'm going to send it. So
okay. Well, I don't either. Somebody else does. And so, but we will do that. And I appreciate everybody hanging with us and listening. And For those of you that are listening to the recording, because I've had several people email me while we've been going saying they're going to catch the recording, I would also encourage you to do the same thing. If you have questions, send them to caresact@whitleypenn.com to get your questions answered, and please go sign up for those updates. All right, we have no more questions. I think I covered it all. This is kind of the speak now or forever hold your peace, and we're gonna let go. But I thank all of you, and I especially thank Jon, especially everything you've gone through and telling us your personal story about how COVID-19 has touched you and your daughter. And we wish that, all will keep y'all in our thoughts, and wish her a really speedy recovery and that she comes home so you can hug her again.
Well, thank you. And I wish everybody, hopefully everybody's having a great holiday,
Okay.
whatever holiday season you're in right now.
Okay. Thank you so much.
Thank you.
All right.